now, Rick, is the Shanghai event.
Explain to our audience what happened on April 19 in Shanghai.
They really went live. They've been doing a lot of planning. They've got two big features. One is the gold fix. With all the corruption in the gold market, revelations from Deutsche Bank and Barclays, and no one ever went to jail in London or in Deutsche Bank or in Wall Street. They just committed trillion-dollar fraud and said, well, what are you going to do about it? We can't prosecute this because it would bring down the system. All right, so fine. China had their own idea. They said, okay, we're going to shut down the gold fix in London, which is an overnight price determination, and because it was loaded with corruption and smoke-filled rooms and deals and insider trading among the London and New York banks that profited from the opening. They just made so much easy money. Now that's going to go away because Shanghai took control of the London gold fix, and now it's the Shanghai gold fix. So they've been signing up lots of banks, and because of the strong regulatory transparency, many Western banks didn't want to participate. But the Shanghai boys are smart, and they said, okay, if you don't participate, then you cannot participate in banking and gold market functions anywhere in China. So they fell in line and decided to go in and participate, like ANZ, an Australian bank, and Standard Chartered, another Western bank that has a lot of Asian ties. Okay, they've lined up the biggest of the jewelry dealers. There are a lot of participants now in the Shanghai gold fix. The second thing they set up was the RMB, Chinese currency, RMB-based gold futures contract. And that's a thing of beauty because they deliver on gold and don't price it in dollars. So what you might see very soon is no dollar pricing for gold. That's what I want to see. And we're going to have trouble knowing, what's the price of gold? I don't know, but I don't care that it's not going to be priced in dollars. I want it to be properly priced. I've been saying a long time, Rick, the dollar's going to rise, then rise some more, finally vanish. When it does, you're not going to see a dollar-based gold price.
All right, Jim, right now I'm looking at Bloomberg.com, and gold is currently at this moment at $1,242.05 US dollars. So we are now going to a place where we're going to see gold priced in Chinese yuan.
That's what the gold price fix is going to be, I think. Yeah, eventually, maybe not immediately, but when there's an RMB priced gold futures contract, what does that mean? Price discovery. Not just for today, but for next month, for June, for September, for December, those major contract expiration months, December, March, June, September. Okay, so price discovery is going to come in RMB terms for gold. Well, then eventually the gold price fix will be in RMB. And the whole West is going to be scrambling to come up with a legitimate currency because the Chinese also have said they're going to gold back their RMB currency. So what's the dollar worth? It's not what's the RMB worth. The question is, if you've got a new kid on the block that's gold backed, namely the Chinese RMB, renminbi, also known formally as the yuan, if you've got a gold price in RMB, or you got a gold backing for the RMB, the big question is, what's the dollar worth? Because what backs the dollar? A bunch of hot air, howitzers from the military, cruise missiles from the military, and deep storage gold backed by $18 trillion worth of debt and an annual $1 trillion federal deficit and an annual $500 billion trade deficit. So what backs the dollar? War and debt and arrogance. So that's going to go away, Rick, and we're left with a very big, difficult decision in the United States. How are we going to assure and guarantee trade, import, shipping, with containers that aren't empty, like what we send out. In the year 2015, the United States, in Los Angeles, San Francisco, New York, and New Jersey, exported 500,000 empty containers. That's one of our major exports now. Empty, stale air to go along with fraudulent bonds, laced vaccines, GMO foods, military hardware.
Jim, I'm going to give an analogy. If you had a tire that was super overinflated, it's so huge, this thing's ready to burst. You have two choices. You could pop it and get it over with quickly, or you could gradually deflate it over time. Are those the two options that China and Russia and the rest of the world are looking at regarding the US dollar?
Yes, and based on the recent examples and attitudes and actions, there's no way to slowly let it out. It's going to either pop or just be pushed to the side. Okay, there's a third alternative. You pop it, you deflate it slowly, or you throw it in the dumpster.
So which one is it?
They're going to throw it in the dumpster. And the U.S. is going to have two alternatives. Come up with a fraudulent, yet more fraud in U.S. finance. They have one option of saying we're going to use our 8,000 tons of deep storage gold and back the dollar, but we're also going to include a lot of, say, Cushman oil facility and strategic oil reserve. And we're going to also use some of our gas reserves that are in giant tanks.